Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to a brand new episode of Markets Tomorrow, where we look at what happened in the markets today and how we can plan for a better trade tomorrow. So if you're not subscribed, please subscribe and share with your friends so that helps. Thank you. So what was the price action in markets today? It's heading towards an expiry. Tomorrow is a monthly expiry and yearly expiry from the last expiry of the year, and it was indecisive closure today. And the reason is the banks has very weak momentum and it is stuck in a gap. Let's see how is it. So as usual, we're looking at all of these parameters on the charts, and this is analysis for December 30th, Thursday, tomorrow, right, 2021. We would also have an additional analysis based on all of these parameters that you see on the right side, and then we'll wrap up with some action levels too. So without wasting time, let's get it over. This is clear logic, almost like a gravestone, but not exactly. Right? It's indecisive, small body, very indecisive. This is also small body, indecisiveness is there, and both bearish. And here you have a bull trap, and here also you have a bull trap where it tries to move up above the previous candle's high and then trap the bulls. Try to move above the previous candle's high and then trap the bulls. Closed below the close also of the previous candle. So that's too bearish. So the gap of the bank nifty, right, still stuck in the gap. Nifty indecisive. That's the action. So 20 points gone and indecisive doji on nifty, but still it is maintaining the 20 moving average. Look at this, 20 moving average is there for the nifty. It has not dropped off that. 140 points lost to the bank nifty, and again indecisiveness is there, but this looks like a spinning top, but spinning top is always need to be on the top of the rally, only then it is having any effect. But anyway, it's a small body, and it is stuck at the same gap resistance, and then it is trapped the bulls today, just like nifty, and then but it still maintains the 35k levels. So today price action, if you see, this is what happened. Very choppy. Dipped, moved up, moved down, moved up, then last two candles it just gave up. Look at bank nifty, moved up, and then it was so. This is kind of a 100-point choppiness that you see here. This is a 400-point choppiness, and the last two candles, see the big sell off at the last 50 minutes, last 30 minutes, big sell off, both indices. Right. So that is the price action. Intraday 15 minutes candle, if you see, that's what happened. Volatility. Look at the Bollinger Bands. The medium band is 20 moving average, and then does not fall off that, which is good. And look at the lower band, which is consolidating. Upper band also is sideways, which means it may be consolidation that is indicated by the Bollinger Bands. But bank nifty, look at this, it's still the lower bands are falling down. That means bearishness could continue, is what it says, and then it's still far away from the resistance of the median 20 moving average of the Bollinger Bands. Right? Let's make a note of the support and the resistances. Where are we? We're at 17,200 and 17,300. We just gave up that today. It's 200, but that's where the major resistance, 17,200, 17,300. After that, if it breaks above that, 17,350, 17,400, and if that breaks, then 17,500 to 17,600 on the downside. 17,000 is one of the crucial support. After that, 16,900, Fibonacci 38, and then after that, you have 16,700, 750, that range, which is a previous single. That also breaks, then you have 16,550, 650, and then 16,450, 350, that range. Right, that's the resistance and supports on the bank nifty, on the nifty, sorry. Now on the bank nifty on the right side, what you see here is you have 35,000 maintained, and that's 35,300, that's the first resistance, and after that you need to take out 36,600, 35,900, then above that you have 36,300, 400, which is Fibonacci 50 resistance from the upside. So downside supports can be seen if it falls to 34, 350 to 750 bands is a Fibonacci 61, and if that also breaks, then you have 33,950, 34,100. So 34,000 is the zone. That's a previous swing low, and then if that breaks, you get into 34,000 kind of levels. That also falls, you have 33,300 down below. So that is resistance on the downside, on the upside, and then support on the downside. Again, out of these levels, momentum, if you see, you can see that the Nifty is in sideways momentum. Bank Nifty is still resisting below the RSI 40, which is bearish zones. Medium term, anyway, it's sideways for both indices, but there is a 15 bar diluted kind of bullish reverse divergence, which is there seen on both indices, and seems to be working. And if you look at the target for that, it is still quite far, 7,500 on Nifty, and it could go up to 37,000 and above for the Bank Nifty. The target is full limit, right? So that's the divergence, and that is the momentum, right? Sideways momentum and bearish momentum on the indices. Trend indicator CDX is saying that it's in the bearish zones. Demat Account is dominating, but the strength is slightly dipped. You can see that the green is dipping and bearishness continues, but green is rising. That means Bank Nifty is more bearish on the short term daily candle. Medium, anyway, it is bearish on both indices. So this crossover of the trend indicators has to happen where the blue comes above. Here also blue comes above. Then we can say trend has changed. Until then, we are in the bear zones. As far as the trend is concerned, on the short term, that's daily. Look at the volatility. It was flat, 1.5% down, so still mainly the 16.2. So so 1.6 is the IV, black volatility, and black volatility percentile is 44.5. Remember, it has gone to 77 kind of level. So today it cooled up slightly and then ended flat. As long as the volatility is maintained between 15 and 20, that should be the range that we are going, right? Anything above 20 may be too volatile to handle. Opportunity analysis is overall it's showing a bullish dominating. Put trading is dominating here in the graph, but Bank Nifty, if you see, it's dominating is the call rating. So definitely they're also indicating the slight bearishness in the Bank Nifty, right, from the opportunity analysis also. But look at the levels. Tomorrow we have the highest put rating at 17,000. That's a crucial thing. Whether that will be broken or not, then you also have half of that kind of put rating at 16,700 levels. So people fear that 7,000 could get blocked. That's why they have that much put rating put there. And 7,500 is getting very good resistance, obviously, and 7,300 also is having very good resistance. That too. So it's very unlikely that it will cross the 7,300 levels. Right? And look at the put call ratio 1.09 is kind of bullish slightly, right? And future of interest rate is showing it's a short bottom. And if you look at the levels, highest rating of the puts are seen as 35,000, which is maintained level today, and then 34,500 also is good amount of put rating. Now 35,500 and 36,500 both are good high risk. So maintaining 35,000 may be the thing for tomorrow, and the bearishness can be seen at 0.7, which is not, cannot say that it is bullish. Short build up is what happened in the futures trade also on the Bank Nifty open interest also. So that's open interest. Look at the heat map. Right? The biggies like the HDFC Reliance. The IT sector didn't work today. Banks also did not help. Obviously, market fell. Right? Now, industrial sectors wise performance. If you see IT closing decisive and decreased on doji, you have to be careful. Normally, after decisive doji, it moves down. It's bearish kind of. So IT may not support tomorrow also. That could be the reason. Probably the USD/INR may be the reason. Means the US dollar index may be the reason. Right? It might have cooled off. So that's why IT is also did not work as it worked yesterday. We'll see that later. So metal also fell down 1%. Auto closed slightly up 0.5%. Pharma was a performer today, and since last 2 days also pharma is performing 1.7% up today. FMCG closed slightly red and decisive. Reality also slightly dull and decisive doji. So, except from none of them performed. IT is already in bullish zones. So, stock picking can be done with confidence there. Other sectors, even farm also, has moved to the bullish zones on the short-term momentum. So, it can be picked cautiously with tight stop loss because the weekly momentum still is in the sideways. It has not caught up. So, pharma and IT is doing good. Other sectors are all. Momentum is still in the sideways zone, and price action wise today most of them were indecisive or flat kind of. So that's the sector's performance. Institutional performance interesting. Once again, if I was back to selling more of 1,000 crores nearby, and that means the same amount was bought by the DI, because of which market did not fall that heavily. But this 900 crores was the selling probably that happened at 3 o'clock probably right today. So yeah, there was a hope that FIS might have stopped the selling, but it continues, although in lesser volume comparatively. Now the dollar index on the right side, if you see, you can see it's consolidating, and yeah, it is little hesitant to break out of the another resistance. After breaking out the two resistances, it is kind of moving zigzag in the same area. Look at the dollar USD INR currency where it has dropped almost 2 rupees in the last 2 weeks of time, and now it has found some kind of support in the momentum. So this may halt at this 74 kind of levels, 4.34 kind of levels. Looks like that. Right? So rupee has strengthened and dollar has cooled off. Now crude oil was shooting, rising up like anything, met with some resistance. You have a resistance zone here, but look at the price. From 65 it has gone back and hit 75. How this resistance works and then pull it down. It could pull down further. This is a short-term chart. Gold, for some reason, was attempting to move up for the fourth time in 2021, but seems like that fourth attempt may not happen, and it gave up, and then today it crashed down back to the crash in the sense it fell back to the same old support zone which it is holding for very long time. Dow Jones, no big moves yesterday. Today it has not opened yet. And other US markets, the next three ones to Nasdaq, S&P 500 and all that, the two are kind of flat as of now. Even the European markets and FTSE, CAC, DAC and all Chinese market, all are not showing big moves, but these would need to be checked in the either in the pre-market or pre-opening of the European markets. Right? That only will give you a clue on whether it will have any implications on our markets or not. Right? Two actionables. One is Metropolis Healthcare seems to be breaking out of a major resistance zone, and momentum is good, and trend is also looking good. GMR Infrastructure also momentum good, heavy volumes, and trend also bullish. That also seems to be breaking out of some kind of parallel box pattern kind of breakout. Maybe that is happening, right? So could be a swing or a positional play. Most better for a swing with tight loss would be better as long as market is not not that great. Now, Metropolis Healthcare is coming under the healthcare sector, not pharma. So yeah, but pharma is doing good anyway. Yeah, so with ties also swing trades can be attempted on this if the momentum is maintained. Right? Just to wrap up the Nifty and the BANKNIFTY charts are put in there. No, not to conclude on that. We can see that the momentum is sideways. It is maintaining that support zone. The next immediate thing is 17,500, 600 levels. In order that we can conclude that there is correction is over. If that is not happening, then correction continues, consolidation continues. Bank Nifty trap, no, that gap is not allowing it to move up. It's still below the moving average and bearish in the momentum. Just to wrap up from what we had seen already. Now to wrap up, this is the view. Mild bearishness sideways reasons. for that view is because of the price action support, sideways momentum, bearish trend, and institutional selling continuing. Right? So all reasons to be bearish, but it's mild because it has made a good recovery. It is maintaining that support zone of the moving average, and bullish price action was seen still yesterday. Today it is in this year because banks are not supporting. Banks have weak momentum, stuck at the gap, and giving more bearish indications. Right. So as long as the lower high, lower high, lower low, no, this level is not broken, or this level is not broken, we cannot say that there is any bullishness that is back in the market. Until then, consolidation continues or it could break down. Either of that, right? So tomorrow is expiry, so it could be very volatile. It's a monthly expiry, and so trade safe. The VIX is maintaining the 15-20 range. Anything, it's not. It is like it is likely to maintain that range tomorrow as well. There could be high volatility for sure, and low volumes are there in the market, and that could add up additional volatility and play safe. And lastly, since the market is still very far from the top, this still could be time for picking up a few quality stocks that could be put in for long-term investment, even used as collateral for your option selling if you're doing that. Right? Short positions opportunities could come up in the market, right? But you have to play it with pair spreads, vertical spreads, or tight stop losses has to be, and the position control also has to be well maintained in order to succeed. The markets can be very choppy, like you seen yesterday. It was making a V-shaped recovery. Last week also it was V-shaped recovery. Today also it had multiple V shapes in within a very small span. So that could continue. I hope that is my view. I hope this helps in forming your view for the market, and hope you figure out a good trading plan. If this video helps you in some way doing that, then you can consider sharing to your friends and hitting the like button. We have very few subscribers, and it would be very encouraging for you to subscribe to have more subscriptions possible, right? So that more valuable content can be provided. We will be motivated and charged to do that. Right? Thanks for watching. Happy trading and happy learning.